Look at this chart. It is one of the most important macroeconomic forces affecting Bitcoin's price, and it is currently providing a signal for Bitcoin that we have not received since 2020. For those who are paying attention, this could be signaling a major move that is about to take place on Bitcoin. This metric is something called the copper to gold ratio. It's a widely followed indicator in the financial world, used by economists, macro strategists, and institutional investors to measure confidence in the economy. At its core, it's a simple way to measure the state of the global business cycle, and that's because copper, often referred to as Dr. Copper, is known for its ability to evaluate the health of the economy. When copper outperforms gold, this line moves up, signaling that investors are bullish on growth and positioning for expansion. And when gold outperforms copper, this line moves down, reflecting investor caution, risk aversion, and a preference for safety. The reason the copper to gold ratio works so well is because copper and gold respond to very different economic conditions. Copper, being used in construction, infrastructure, autos, and manufacturing, is tied to economic expansion. So when the economy is growing, copper demand and its price tends to rise. You can see that through this chart of copper. From 2016 to 2017, and again from mid-2020 through 2021, copper prices surged during periods of strong economic activity. But during slowdowns like the 2018 US-China trade war, 2020 pandemic, and 2022 interest rate hikes, copper sold off sharply. Gold, on the other hand, behaves in the opposite manner. It's a defensive asset that tends to rise when investors are concerned about inflation, war, or financial instability. For example, if we look at the chart of gold during the 2020 pandemic, price briefly dipped, but then quickly surged as investors rushed to safety. Even in February of 2022, when Russia invaded Ukraine, gold saw a sharp rally as geopolitical tensions made investors go risk-off. That's what makes the copper to gold ratio so powerful. By comparing these two assets in a single line, it gives us a clear read on the broader macro environment and whether investors are leaning into growth or shifting to safety. According to research from Texas A&M, the copper to gold ratio tends to lead major bond yields, like the 10-year Treasury. And that's important because yields shape the broader macro environment and heavily influences where capital flows next. That's exactly why its turning points have aligned almost perfectly with the most explosive phases of Bitcoin's bull markets, and also with its tops.